Making $1,000 every day through finance require a combination of knowledge, strategy, and discipline. Here are some key steps you can take to achieve this goal. Start by setting clear finance goals. Before you can make $1,000 every day, you need to have a clear idea of what you want to achieve financially. Identify your long-term and short-term financial goals and make a plan to achieve them. Learn about the stock market. Investing in the stock market is one of the most effective way to make money in finance. Start by learning the basic of how the stock market works and dive deeper into different types of investment and strategies. Understand risk management. When investing in the stock market, it is important to understand the risk involved and how to manage them. Make sure you diversify your investment and have a solid risk management in the place. Consider trading option. Option trading can be a lucrative way to make money in finance, but it requires a high level of knowledge and experience. Consider taking course or working with a mentor to learn more about option trading. Keep your emotion in checks. Successful finance professionals are keep to their emotion in check and make rational decision based on data analysis. Develop the discipline to stick your plan and not let fear or greed drive your decision. Continuously educate yourself. The finance industry is continuously evolving, so it is important to stay up to date on the latest trends and developments. Read financial news, attend conferences, and network with other professionals to stay ahead of the game. To make $1,000 every day, you need to have a solid understanding of finance and investment strategy. Here are some key points to consider. Create a budget. Start by tracking your income and expenses to understand your financial situation. Once you have a clear idea of your finances, create a budget that allocate your income towards necessary expenses, saving, investment, diversity your portfolio. Diversification is key to minimize risk and maximizing risk return. Spread your investment across different assets classes such as stocks, bonds, real estate, and commodities. Investment in stocks. Stocks are a great way to build wealth over the long term. Consider investing in blue chip stocks that have a proven track record of stable return, or growth stock that have a high potential for growth. Consider funds. Index funds are a great way to invest in a diverse range of stock with low fees. These funds track a stock market index and provide exposure to a broad range of companies. Use leverage wisely. Leverage can amplify your returns, but it can also amplify your losses. Use leverage wisely and only invest what you can afford to lose. Stay up to date on market trends. Keep track of the latest market trends and news to make informed investment decisions. Use financial news outlets and research reports to stay informed. Consider alternative investment. Alternative investments such as private equity, hedge fund, and real estate can offer high returns but also carry higher risk. Do you have your research and consider seeking professional advice before investing in alternative assets. Understanding investment option. Investing in stock, bonds, mutual funds, or ETFs can offer long-term returns that can help you earn $1,000 per day. However, before investing in any of these options, you must understand the risk and return associated with each of them. For instance, investing in stock may offer high returns but comes with a higher risk of loss compared to bonds or ETF. Develop a trading strategy. A trading strategy is a set of rules and guidance that can help you make investment decisions. It includes determining your investment objective, risk tolerance, and time horizon. Once you have defined your parameter, you can develop a trading plan that align with your goal. It can include strategies like trend following, momentum trading, or value investing, which can help you identify opportunity to make profitable trades. Use technical analysis. Technical analysis is a method used to analyze stock prices, identify patterns that can help you make informed investment decisions. Technical analysis can help you understand market trends, supports, and resistance level and other indicators that can guide your investment decision. Learn about fundamental analysis. Fundamental analysis involve evaluating the financial and economic factors that can affect the performance of a company. It includes analyze factors like revenue, earning, assets, liabilities, and cash flow. Through understanding a fundamental analysis can help you identify and undervalue or overvalue stock, which can provide you with an opportunity to make portfolio trades. Diversity your portfolio. Diversification involves investing in a mix of different assets such as stock, bonds, mutual fund, and ETF to reduce risk. A well diversified portfolio can provide you with steady returns and help you minimize losses during market downturns. Manage your risk. Investing involves risk, and it is essential to manage them effectively to achieve your financial goals. One way to manage is to set up loss order to limit your losses. You can also use hedging strategy like buying put option or short selling to reduce your exposure to a market risk. Stay informed. The financial market are constantly evolving, and it is crucial to stay up to date with the latest news and trends. You can read financial application with financial news or subscribe to investment newsletter to stay informed.